Hi, welcome to the Market Alert for Monday, the 7th of September 2015. Just before we get started, just to remind you, today the US markets are closed, and what you are seeing here is the sort of electronic market making a market in the absence of any official trading today. It's Labor Day, so all markets are closed. Only the electronic markets are going to trade for a certain period of time, so what the volatility is going to be like, I don't know. So just to give you the heads up there, it's probably best to stand aside. I mean, at the moment you can see that the market's traded very well on the overnight, moving back to the upside, and the reason for that, we just switch over to zero hedge. I'll show you exactly why the market traded higher at this time, and that's because the Chinese equivalent of the S&P was a limit up 10%. The bank stocks plunged, and the stock market stabilized, but by the end of the session stocks were hammered and they were 5% lower. So that's what you're actually seeing in the chart there. It's the Asian market, and you can see the market's gone fairly quiet now, and no doubt will continue to become quieter as we go on, especially after 7 a.m. Or rather 8 a.m. when we've got the FTSE and the German market will have been trading, and no doubt have not an awful lot of direction apart from to take its cue from China, and then no doubt there'll probably be weakness coming into the market later on. So very difficult one to call given the backdrop of everything at the moment. You could say, well, the markets will just go up because there's no resistance, but you just don't know because of the way things are unfolding at the moment. The only thing you can do really is if there's a trade, you could do it on paper just to see how the market's panning out. You can see it's become fairly quiet now. Each of those bars are 5 minutes, so it's a bit of quietness around at this time, so just be warned about that. Friday, another good day. There was a bit of a blip later on in the session, but you can see there the market trading down to the 16,100, then the market breaking it. Just bring that back, and then the market trading down to 16,050. We see a buy signal there, which turned out to be a 34-point loss. There's a 36-point loss there as well, so giving 70 points there of losses, but then the market trading up, and up to this level is around 80 points to make that up if you had have traded around this time. But as I've said before, Friday evenings really generally aren't good. This is an exception to the rule here for a Friday session. Obviously bringing the market back before the weekend, as I've said to you before, they just don't want this market to go down. They are doing everything in their powers to fight it. So if you look at the daily chart, you can see precisely this. You can see the market being driven back up here as the Chinese market was up on the overnight. Prices finding support at the 62-point retracement there, fib retracement 16,000, which we spoke about in Friday's alert there. News for today, nothing. Holiday for the US, no other news out, so again making it very difficult to call which direction the market is likely to go in. Chinese market down 1.2 now. So the S&P futures, the equivalent of the Chinese S&P futures, that is up 10%, hammered, and moved back to the downside along with the banking stocks as well. The implied volatility 23.41, just up slightly from Friday's 22 point something, I think it was, but fairly sideways there, given the fact that the market was down on Friday in the early part of the session, then rallying before the close. Right, that's it for this morning. See you in tomorrow's edition. Hopefully we'll then get back to normal, but at the moment very difficult to call on which direction the market will take, and therefore it may be just best to stand aside for today. Right, that's it from me. See you in tomorrow's edition. As ever, thank you for your support and also for watching. See you in the next one.